Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook, the chartist from Redmayne Bentley. Bill, we're going to start by looking at the FTSE index today, and we've got commodities to look at too. When I say commodities, we're going to be looking at Palladium mainly. But talk us through the FTSE.
Well, the FTSE, Giles, has recovered. Sort of a 25 days it's taken from the low point, 22nd of January, to get to the 50-day moving average. It's my sort of recovery point. I wanted 15 days. It's taken a bit longer. And alas, it sort of hasn't held the 50-day and is looking a bit sort of suspect now. And this is the disappointing part of it. But the good news is those who got on board with the covered call warrants have made a reasonable turn. So if that's the sort of trading style, 20% plus return in that period was the order of the day. So and they were sold because the FTSE failed to hold that where the box is, the green line. So that's what I'm looking at now. Sort of the line point was the vertical line. The last vertical line was a possible late entry point, but I'd have got in a bit earlier than that. But it's the box line, the box at the end there, which would have signalled a job done short term, and now we've got to wait to see where we go. And the market now is struggling to hold 59 or thereabouts, and if it can build and move towards the 6,100 level, we might have a new trading range established. But that's a scenario which might come out, but we'll sort of see where we go from here. But job done on the cover call warrants, and now it's elsewhere to look for trading opportunities.
All right, and we're going to talk about some of those trading opportunities shortly.
Yeah.
Let's have a look at the ETF next that you have for us today.
Well, the map of the against the FTSE.
Yes.
What I've chosen here is palladium, platinum, copper, silver, and gold, and copper's the sort of the odd one out really there, but. This is just against the FTSE over a year to see what sort of gains we're getting out of these things. And Palladium's sort of top of the tree there, well, the orange one, which is sort of making the most progress. That's about 40% up. Platinum has been utterly brilliant, but cooling off now and making a hook at the top. That's the blue one. Gold is sort of is there, holding in there at 29. And silver has made a great run since December and sort of consolidating, looking perky, but at about the 15% level. So they're all in there still, but cooling off slightly with for different reasons. And while the dollar remains weak and the market certainly look troubled in the sense of finding a direction, with the banking sector certainly not supporting every day, but every odd day, it seems that commodities are still going to be around.
And let's now have a look at Palladium. Should we have a look at the history first? Yeah,
I've also chosen, Giles, an American share today. I've chosen Stillwater Mining there, but Palladium up to date. Do you want the history or the...
Yes, let's go with the history, and then we'll move on to the next one.
Yeah, the history is very important because we were discussing, amongst other issues, in the Thursday group about how do I trade commodities? Is it the same way we do equities? Well, I've just sort of panned out sort of vertical lines here, entry and exit points on the Palladium chart. This is from 1999 to about 2000, 2001, and when the vertical line first comes in on the left-hand side is your early entry point, and if you'd taken that point around the 16th of July 99, you would have got in at 3400, and the exit point, which I'm using, which comes in third line in from the left, would have got you out at about 70. So you need double your money there. And if you got in a bit later, at about 42 on the 26th of October 99, you'd have made about 71%. The idea here is not necessarily I've got to get in at optimum points or low points or when the signals necessarily come in, but just be aware when the trend is changing or moving towards sort of a more regular movement on the upside, and not trading when it sort of goes vertical wall. And if you are trading like a vertical wall as it was in the latter part of 99, then you've got to be careful and use an appropriate stop. And the stops we use for that is a DCF line based on the 21-day. Oh, sorry, beg your pardon. Adaptive moving average, which is a zero-lagged moving average in there. So, and that sort of tracks the share very, very, very sensitively and pulls out when it retraces through that line. So, and each of those vertical lines represent trading opportunities there. And you notched up 71%. 24% and a 19% gain just by trading that system. and then where the triangle comes at the end, where the 200-day starts sloping off and we're hitting low points and the 60-day low points, you're going short there at about 7,000 odd, and looking to possibly make 50% on that if you'd stuck with that strategy. So it's
all in all, a nice little series of trades.
It's a nice earner because it's anything which goes ballistic has to come down again.
Yep.
And it's a case of recognizing when it does go ballistic through the slope or the speed of movement that it's making, that sort of it's not sustainable forever. And this is the beauty of the quantity stuff, is you don't have to rely too much on company results and when the dividends and directors doing this and directors doing that. Of course, we've got a bigger market with ETFs now coming on board, and that actually helps in a way because you're capturing a lot of people who perhaps aren't as experienced as looking at the chart and understanding what's going on, and maybe chasing it for different reasons, and that also gives that balloon effect. So hopefully that might amplify the gains, not at their expense necessarily, but sort of the net effect of it.
Now the next chart is PHPD. Now is that Palladium?
That's Palladium up to date.
Up to date, right.
That's Palladium up to date. This one is the top commodities. This is 34% up in 3 weeks, where the FTSE is about 3.5% up, not including the recent falls it's had. But so that 34% isn't as up. And I put two vertical lines on there as to say, well, possible optimum point of entry, because we are actually looking at a share which is hyper trending. It's sort of going 13 or 14 days up in a row. It's quite mad at the moment. So there's sort of, and at the bottom there you see where the volume is actually a company with high volume. The more yellow there is there, the more volume there is above normal, and the volume trend is positive. So it's certainly really supported by a lot of buying. And to understand what in perspective what's going on, it's platinum price has gone absolutely through the roof, and that's sort of cooling off slightly. But Palladium, which is is tagging along behind it, usually on a 2 or 3 to 1 ratio, has now moved to about 4 to 1. And for the car industry, Palladium is an alternative. The politics behind Palladium is that a lot of it is come from a byproduct of nickel production, and most of the nickel production is in Russia. And this is one of the reasons why we had I think my view is that the West is averse to sort of going for the Palladium route, because it's sort of the Russians have that sort of control over that market, whereas the West has more control over platinum, and 80% of platinum comes from South Africa, and that's obviously a problem with the smelting and the electricity problems out there. So, and the market there has been forced higher. So it's sort of pushed up because of that, and the other factors making commodities look better or more attractive than equities.
So would you be buying Palladium right now?
Well, right now, no. Right now, you're waiting for it to come back, and if it comes back, it's currently off today. It's about $16 off, and if it goes down to about 5.2, the 5.23 level, that will be my stop level, as I would have used back on the 3rd of January 2001, right at the high, right near the highs. So I'm not aiming to get out at the high. I'm looking to take a profit when it goes through the moving averages, which trail the underlying. So it's a case of having a discipline of using using a moving average behind a hyper-trending stock, as it is now, to get out when you can at the most appropriate level.
Okay. Now, the next and final one you want to have a look at is SWC. You alluded to it earlier. Talk us through this.
Well, this is the largest platinum palladium producer in America, and we can see at the end there, there's a lot of volume coming through at the bottom. The yellow again is showing the volume trend indicator, supporting the price movement. And when you have a share price which now doubles in a month, you need to have volume behind it. And looking at the other times when it became a buy along the chart there where the circles are, there hasn't been the volume supporting it. And again, this is sort of the choice of, do you actually trade a mining stock which is sort of a high cost produced mining producer, or do you focus on the underlying? And I think my preference is the underlying generally. Although this is a smaller company based in Montana, it sort of has attractions at certain times. And again, this one looks well overbought. But if it comes back through the AMA 21, I would be looking to take profits on that one.
Bill, it's fascinating talking to you as always. Thank you very much for those thoughts.
Pleasure.
And interesting that we're, it's been less equity focused this week. I think that says a lot about what's going on in the market. And we will chat again next week and have a good week. Have a good week's trading.
Chart of the week with Redmayne Bentley.